Well, the first half of the year is in the books, and stocks, well, they gained across the board. All the major indices. The Dow was up almost 8%, S&P also, and the NASDAQ finished up 13%. But the numbers is a little bit misleading. The NASDAQ, yeah, it did have the first best half of a year, in fact, in 14 years, but it's been under a lot of pressure. And here's the thing, the laggards are beginning to come to life. Energy, the only losing S&P sector, had a really good week. By the way, that good week became something of a great week today when North American rig count was declined by just 2 rigs. Sounds like a small number, but keep in mind, we're up 122% on rigs in the last year, so any kind of slowdown there is welcome news. Other sectors of note, technology. The big question, is that rally over, or is this just a pause? Retail, today, Nike popped. Consumer discretionary stocks look pretty good. But the question is brick and mortar really going to come back to life? Home builders, a group that, I've shared with you. I love them. They still face supply headwind, but it's materials and industrials that act great. My favorite 2 sectors, I call them dirty fingernail stocks. Here to help me answer some of your questions and get us ready for the second half of the year. You might remember these faces. Jim Frischling and Hitha Herzog, the gang's back. Hey, guys.
Yes, we are.
All right, let's talk about the first half and the momentum or lack of momentum. I'll start with you, Jim. Overall, with the market, are you concerned at all? Because it's been a little shaky. It's been spotty.
I do have my concerns. I'm actually very pleased with how the market's performed the first half of the year. I think given all the uncertainty and all the headlines, I have to tell you, I think we're finishing the first half of the year in a very decent manner, and I'm pleased where we are in terms of how up we are. I would have thought there would be a little more volatility, but I have to tell you, I feel great as we lock the first half of this year and put it to bed.
This morning, consumer, we had 2 things, and I thought about you, Hitha. We had the personal income and spending. Income went up, spending went down. We're saving at 5.5%. That's the highest level in a long time.
Which is a great thing.
It's a great thing, but sentiment, though, we also look at the sentiment numbers. Sentiment went through the roof, consumer sentiment. So consumers are saying, hey, we feel great. They're making more money. Why are they keeping it in the bank? Why are they saving it?
Oh, I think there's still that element of fear that's still out there. They are a little bit afraid of where this economy is going. I mean, let's think about it. It's only been a couple months now that we've had this rally. Therefore, I think people are still holding on to their money. They want to make sure that this rally is going to continue. And I'm a little bit lukewarm on this rally. I don't know if it's going to continue all the way to the end of the year, but people are holding on, and they want to make sure that they will have funds going into the next couple quarters, and then they'll start spending again.
We performed through the first half of the year about where I thought we'd finish the year. So to your comment about being lukewarm, I will tell you that my spidey senses are starting to pick up on me, and that I would be getting a little bit of taking some things off the table, maybe putting some money in some names I'm very comfortable with, maybe a little risk averse, I'm telling you, as we approach the second half of the year.
That's a theme in this market right now, rotation. So are you saying that's a legitimate theme that, hey, when the NASDAQ is up twice as much as the Dow and S&P, maybe you start taking those profits and putting them somewhere else?
To your question about whether tech, is this a rotation or is this the end of the tech rally, I'm in the camp of rotation. I think the NASDAQ has been dominated by some pretty big names, and I think there's nothing wrong when you see that type of performance to shift into. I think that's why you saw energy pick up. You're seeing financials pick up. Sorry.
There's an element too that the market is a little bit overvalued. I mean, look at the cyclical adjusted price per earnings ratio, which that accurately values the market. That is up 78%. When you have that kind of valuation on that, that becomes a little fearsome, I think.
But it is a mistake, though, that sort of tried to pick a top, right? I mean, isn't that, in other words, should investors let their winners continue to win? And maybe, you never know where the tops are, so you could be sort of premature to pull it out based solely on valuation, can it?
I agree. I think trying to time this is very dangerous indeed. For lack of a better cliche, I don't see a canary in the coal mine.
We need 1 or 2 stock ideas.
We are big fans of housing for a variety of reasons. Home sales flying, inventory low, so and construction way down. So actually, I was a fan, and it's kind of a simple name, but loving Home Depot, the best in its business, home improvements, appliances, the consumer.
Jim would pick a company that's 100% American on the eve of July 4th. What do you like, Hitha?
I like Nike. They beat on estimates. They just did this deal with Amazon. I also like Apple. Since the debut of the iPhone, the stock has been up 727%. This is a really good buy. I know people are questioning the innovation now that Steve Jobs is not really around. However, I think this is something that people would want to stay in.
All right, guys. Thank you both very much. It's great seeing you.
Good to see you.
Thank you.